However, there are certain fundamentals which don't change, right? So there used to be this retailer, Mr. Kishore Biyani. He used to talk about a phrase which seemed very apt. It was called rewrite rules, retain values. Okay?
Okay.
So you have to keep rewriting the rules, but retaining the values. I started my career in 1986, 87, starting to learn. And since then, I think the biggest change in my perspective and my learning has been that at that time, I was looking for the difference between the price that I was paying and the value at the time of investing. Okay? To today, the evolution has been, I'm looking for the difference between the price that I'm paying and the terminal value maybe 10, 15 years from now. So it's for me that one big change. And the consequence of that change was that many years ago, what I was looking for, that was a value arbitrage. It was focused on tangibles and catalysts, things which were much more short-term in nature and one-time in nature. I'm now looking for business models and management capabilities which are structural in nature, which play out over a very long period of time and which keep compounding. So I would say that has been the biggest change in this journey of my learning. I've been very fortunate to have, I think, some of the greatest teachers possible in the capital markets, right from Rakesh ji to Ramesh bhai to Vallabh bhai to my father, Hemendra Sheth and Asit co-teacher at ASK. So I'm grateful to all my teachers. Thank you.
Can I just ask a repeat, rather follow up to you, which is that if you had a choice and if you were to think back, would you have wanted to do this even 15 years ago, or was the time right for what you did back then, and currently the time is right for hunting for terminal value?
No, if I had that insight at that point of time, I would have done that.
Okay, thanks. Ramesh, the same question to you to start off with.
Thank you, Neeraj. Thank you, Baroda. What a great city, and thank you for all the love and admiration. I think Utpal and I can honestly say we are overwhelmed by the affection we got. I mean, in the break, it's actually very nice. Only if our wives could see us now, then they won't criticize us so much, but leave that part aside. Thank you again, Neeraj, for hosting this show for us. I think, as usual, Utpal answer very concisely what I would have said. I think the biggest transition that has occurred to me, I came to the markets in 88, 89, didn't have a lot of money at that time, as most people didn't when you start off your career. And I was more interested in generating income that time. भाई साल का 20 लाख खर्चा हो जाए, 30 लाख हो जाए, 10 लाख extra बन जाए, somehow survive in the mode out there. The transition happened when I realized I don't want to generate income, I want to generate wealth. And the wealth is generated through longevity investment, superior compounding rates, buying a better business. So over 30 years, that journey, that intellectual journey has taken place that has made me not from trying to catch a fish, but trying to understand what keeps fish going in the ocean, if you will, Neeraj. And it's an extraordinary journey. And the good news is that anyone sitting here today, especially the young people, can embark on the same journey. Just to paraphrase a quote I heard, I talked to one of the wisest investors I know in India a few years back. And he'd been through all. He'd been through the 80s decade of Rajiv Gandhi's first liberalization, 90s decade of India's actual liberalization, the tech boom, the infrastructure boom. And someone asked him a very plain question. He said, in your 40-year investment journey, what has been the best decade for investing for you? And without hesitation, he replied, the next decade. So that's the point I want to give to you all, that no matter how far you seem the journey from 800 to 66,000 the index. The next 10 years are probably more promising. So if you start on the journey not of income creation but wealth creation, you'll all be fairly richer and much more financially free 10, 20 years from now if you stick to that journey.
Wow, awesome. A round of applause there. You know, yesterday at dinner, and you know, we have to admit that futures and options are an integral part of what's happening in the markets currently. And I was a bit worried that the audience might want to hear about FNO. And I knew that we are not going to talk about FNO, right? Because as I think Utpal said that, or maybe Ramesh said that, the idea is to create wealth and not just money. And I think the creation of wealth can probably happen by learning from the people who've created wealth in the most admirable fashion. So I think over the next 1 hour, we'll try and do that. We will have a small round of questions, 2 or 3 maybe. I would urge people who ask questions as well to not try and talk about trading ideas, etc. The things to learn from these gentlemen are much beyond that. Ramesh, a follow-up question to you. When you, you know, what separates, like I said, what separates the wheat from the chaff is not just which stock or which investment idea that you've bought into, but how did you arrive at that idea? How did you distill the thoughts when you were confused between whether or not to go for it? And if you went for it, how did you get the conviction to really bet the house, back up the truck and buy, so on and so forth? Can you talk a bit about that?
Sure. You put it well, Neeraj, when you said what are the mental models we use, and also it's an evolutionary journey. And I'll just go through some of the basic mental models. I mean, Charlie Munger talks about how important it is not to just read a balance sheet, but to understand social psychology, marketing, engineering, when you pick a stock. So let me just go through a couple of them for you right now. One, of course, the most fundamental concept in investing is margin of safety. As your mother must have taught you, रुपए की चीज अपने को 40 पैसे में खरीदनी है. You want to buy things cheap, right? But let me give you another example to say how applicable the margin of safety concept is. We all know recently that there was a gruesome accident when the Titan went down and burst in the seas a few days ago. You've all read about it, I'm sure. Now, why did it happen? Because he didn't build redundancy into the system, all right? There was one porthole attached to the titanium hull. The titanium hull itself was not correct for this place out there. You could not open it from inside. There was no secondary rescue system. Once the oxygen ran out, it ran out, and the people died. They died, if you ask any engineer, he will tell you, because there's no margin of safety in the Titan, okay? Let me give you another example that happened 50 years ago. Apollo 13 was racing to the moon. They had an accident. What the astronauts did, they went from the command module, which had a problem, to the lunar module, stayed there, came back to Earth, and managed to survive. Because the engineers at NASA had built a margin of safety into the business. So margin of safety is a very fundamental and important concept that we need to understand in the stock market. कि रुपए की चीज़ अपने को 98 में खरीदनी है. Then good things will happen and the prices will take care of it. So the first concept I ask you, if you're looking at longevity of investment, is look at the margin of safety. Are you buying cheap? Sometimes you might want to buy a stock because you think it's going up, because FI is buying, because you know, you have some tip about the stock, you know. But typically that doesn't create wealth. That just creates price fluctuation, right? So margin of safety comes when you understand the value of what you're buying. For example, in my own career, I will tell you, give you an example again. I'm not recommending the stock in any shape, way, or form. I think Utpal and I discovered this stock together. He used to point out to me, Utpal, when I used to talk to him, that you were getting United Spirits, which owned, you know, 50% of India's liquor market, for 200 crores. Now think about what I'm telling you, that you are getting a country of 1.4 billion people, out of which each year maybe 1 crore, 2 crore come under 21 years of age so they can start drinking. And the best brand names for 200 crores. So I knew that was the margin of safety, that if it was a private transaction, you would have probably paid, you know, 5 times that amount, or now it's 100 times that amount. But the stock market sometimes gives you those great bargains. So sometimes you have to buy them when they're cheap and have the patience to hold them till they actually happen. And actually Utpal gave me the first idea of United Spirits at that time. So maybe he'll add to that.
No, thank you, Ramesh, for your kind words. In Gujarati, we have this phrase, कि कुआमा होए तो हवाड़ामा हावे, right? Which means if there is water in the well, only then will you be able to get water in your bucket. So, in that sense, that concept of terminal value that I was talking about, or which Ramesh described as 1.4 billion population, 50% market share of the liquor markets, I think that was enough to give us a context of that potential terminal value. Though, to be honest, I never put it in my mind as a terminal value at that point of time.
Okay.
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 But while I found the idea, I think what Ramesh and geniuses like Rakesh ji did with that idea is what is much more important. So, buying and selling are not acts of intellect. Rakesh ji used to say they are acts of wisdom. Investing is an act of wisdom. Putting it in that context, it's not that you buy at one shot and forget about it. Right? If Ramesh eventually bought 100 shares of United Spirits, I'm sure he did not buy all of it in the first round that he bought. It's a continuum. And therefore, I'm not as obsessed with that framework that I must buy at the lowest price. It's not. I need not always buy at the lowest price. But as our conviction and belief in the terminal value keeps increasing, you keep adding.
Okay. How easy is that? Because for a lot of people, right, if they have bought a stock at a particular price, or if they have seen a stock at a particular price, I'm not associating value here, just price, then to buy the stock 20, 30, 40, 50% higher is a very difficult task. So how do you bring that discipline to your purchases?
So I'll give you a real example, and nobody could do this better than Rakesh ji. He bought his first lot of Titan at 32 rupees. Okay?
Come 10 bonuses, splits, whatever.
Yeah. And then we kept on buying. We bought at 80 rupees, then at 140 rupees, then at 240 rupees. We also bought at 900 rupees. He bought Titan at 30x of his first purchase price also. So you're talking of 30-50% higher. He bought 30x higher.
How? And how do you get the conviction to do that?
That's why he's a billionaire and we are not. I mean, that's the reason.
Yeah. So, but the question is again, how? Everybody out here would love to understand how do you get the gumption to be able to do that? What goes behind it?
It's very difficult. I mean, just because Utpal says it doesn't mean it's easy.
Yeah, it is
very,
not.
Very, very difficult to do it. So only the truly great investors are able to do it out there. But I'll just come back to the margin of safety to explain that point to your audience a bit more, Neeraj. Is that you're getting United Spirits for 200 crores that day I was telling you. So you could buy 10% of the company for essentially 20 crores. 10% of the company. Which means out of every 10 bottles of beer sold, 1 bottle was mine. If I own 10% of the company. And for 20 crores at that time, you couldn't buy a flat in South Bombay. Okay? That's how cheap it was. That's how great the margin of safety was for me at that point. So I just want to illustrate the point to you that markets give these opportunities. Why they give it, I don't ask. But time and again, at the end of every bear market, at periodical times, people sell off stocks. These great bargains available. And if you keep your eyes and ears open, you'll be able to buy, as your mother said, rupee ke cheez chavanni mein. Okay? And that's how you ride your way to fame and fortune. You need to get 2 or 3 right in your lifetime to actually build your fortune. The second corollary to that, of course, Neeraj, is you have to back up the truck to buy, which his boss, I think, did the best of everybody else. Bought at the get-go, bought higher and bought higher than that, okay? So we learned from the masters. But it's the thing you learn over time as you understand the businesses you're buying and your moral clarity as to why you're buying it. I think you're able to do that. It's very hard to do it. If I ask them tomorrow to buy something at 100 or 300, they'll probably be selling it and not buying it. But to be able to understand that business and the numbers takes a very evolved investor. So I'm not saying it's the best thing for you to do at the get-go, but perhaps as your evolution happens, you will do that.
Okay. You want to add to that? Utpal? I'm just trying to understand. So, and then I have a follow-up, of course, to what the point Ramesh made. But just the point, right? 30x, right? 30x, log bolenge was, I buy a stock, if it goes up 10x, nab nihal ho gaye. Right? You go out and sell. And here you are doing the opposite, which is buying 100% higher, 200% higher, 30x higher. How do you do that?
So before we come to how you do that, we must first understand why you must do that.
Okay, sure.
Right? So everybody knows and talks about the power of compounding. But when you plot that power of compounding, you will see that that curve is a parabolic curve. Okay? So to be in the game at the time that that parabolic effect comes is so crucial, right? So it is important to know whether or not the parabolic effect is behind you or ahead of you, right? And that comes from your perception of that terminal value. So when Rakeshji would have bought at 32 rupees, he may have thought that the terminal value is X in his mind. It was not a precise number. It was a directional number. But as his conviction, as Rameshji put it, as his conviction, as his insight kept on increasing, that terminal value kept on moving higher much faster than the pace at which the price kept on moving higher. Right? So at all points of time, he knew that the parabolic effect is ahead of me. Right? So mathematically, it's important to understand that parabolic effect. And how to do it is something that we all have to learn the hard way on our own. We have to learn from our mistakes. We have to do our introspections, right? And we'll get it wrong. But even if you get one or two of those right, it makes your life.
Do you guys still do that? I mean, try and make such bets in that hope that you are betting on a few, one or two or three of them will really hit it, you will hit it out of the park, and that will take care of even some mistakes that you make?
I mean, I look at it another way. A lot of people, I criticize myself for not betting the truck on a particular idea. And someone was asking me yesterday only about this point, and actually it was Alpa was asking me.
Oh, okay.
Okay, his wife was asking me that. So, my answer to that problem is the second mental model that we use, Neeraj, which is what he talked to and everyone I've talked to ad infinitum is compounding in the market. So what I try to do is I try and measure my portfolio. Has it doubled in value every 3 years? If it does that, I know I'm on the right track. And just to have some fun with your audience.
I was about to say that. Should we do that exercise?
Yeah, we should do that exercise because it's always fun to do it. Who's good in math out here? Anyone a math major? Any young kid who's a math major?
Okay. We have one guy raising his hand there.
Yeah, please stand up. What's your name? Please say that again.
Can we have the mic to Shreyan? Very quickly.
So I've done that in a video, but it's always nice to do before a live audience. And if you haven't seen it, you'll enjoy it, you know. How old are you, Kamdar? You're 29. So let's say he has 30 years ahead of him in his professional career by the time he's 60. And let's say he has saved 10 lakh rupees so far.
Ramesh, just a second. I don't think his attention is here. Okay. Can you just talk something?
Okay.
Perfect.
Yeah.
Okay, Ramesh, yeah.
So let's say you're 30 years old and you're 30 years career ahead of you, and you've got a gift, you got a savings of 10 lakh rupees. Now you start putting it in the market and you double it every 3 years.
Yeah.
That means you can get 10 doubles in your lifetime, right? So Neeraj, you want to do the honors and take him through?
No. You are good at this. I'm not.
Okay.
So I would love you to,
Okay,
for you
so
to
you
do
take
it.
10 lakhs, what happens after 3 years? How much do you
It
have?
becomes 20 lakhs.
20 lakhs. What happens after 6 years?
It becomes 40 lakhs.
40 lakhs. What happens after 9
80
years?
lakhs.
Keep going.
1 crore 60 lakhs.
1 crore 60 lakhs. Then
3 crores 20 lakhs.
yeah. Then let's
Six-
just round off. 3 to 6 ho gaya.
Yeah, so 6 crores 40 lakhs.
Ah.
12 crores 80 lakhs.
Yeah.
Probably
25 crores.
25 crores 60
8
lakhs.
doubles.
Ah.
50 crores.
Yeah, 50 crores, then 100 crores.
What did you start with?
I started with what, 10 lakhs,
And now you're 60. How much do you have?
with 60x.
No, you have 100
sorry.
crores.
Sorry, 100 crores.
What are you saying? 60 lakhs?
Sorry, sorry.
I'm going to faint out here. You'll have 100 crores.
Yeah.
100 crores.
100x.
Now, I don't know, 100 crores in dollar terms today is about 12, 30 million dollars US, okay? That make you rich anywhere in the world you go to. You could go in Tokyo, you go to New York, you go to Beverly Hills. You'll be a rich person, $12 million. And what have you done? You invested and you compounded your money. Let me tell you a secret. The Indian market is giving you that opportunity. When I started, the index was below 800. Today it's 66,000. Okay? Index is up 60 times. Forget what. If you are slightly superior, you can compound at better rates. And all it requires for compounding at that rate is maybe 20 to 23% a year. The Sensex itself moves at 15, 16% a year. Plus you get 2% dividends. So you just do a little bit better than what the market's doing. And you're on the journey. And let me tell you a secret. Every single value investor that I know in Dalal Street or Wall Street has used that formula to get rich. Occasionally you'll have a brilliant guy who can really bet big on a stock and make it through one particular stock, or do a great amount of trading as George Soros did. But mostly you plod your way to wealth. You become financially free not at 30 but at 60. But there's a way to all of you to do that. There's nothing stopping you. I am convinced that the next 30 years are as exciting for India as the last 30 have been. So the markets are going to be buoyant. India is a growing economy. And you've seen the path. Compound your way to wealth, Neeraj.
Yeah, thank you. Awesome exercise.